some ETFs with the team at Franklin Templeton Investments. David Mann joins us, head of ETF product and capital markets. David, as we've got big tech on our mind, let's start with talking about the Mag 7 Focus. You guys have a growth fund where a lot of these companies play a central role.
Yeah, sure. Thanks for having me, Oliver. Yeah, FFOG, our Franklin Focused Growth Fund, that was actually a mutual fund to ETF conversion that occurred last year, and certainly one that is very, very active in the Magnificent Seven stocks.
How do you compete with just the basic cues or an index that's been skewed so hard? You know, a year and a half ago, a fund structured this way would have had a significantly high weighting. Now the market has skewed so hard to these companies.
Yeah, sure. So, that being an active fund, the team and the research will go through thinking about, okay, why first do we even want to invest in the Magnificent Seven? And certainly in terms of their size and their scope and how that helps with regulatory conversations, helps with investments into AI that's going to pay off over time. But importantly, they kind of get lumped together, but there's going to be some differences, and the outlook might change for that particular fund. They're currently underweight Apple as an example. It's not anything against Apple as a company, but certainly if the growth opportunities might be slightly different between those seven, they'll toggle overweight and underweight accordingly. One of the reasons we like active management.
Okay. The fund so far since over the last several months has been ahead of the cues. Are there any particular horses in the big cap trade you feel the strongest about?
Oh, among the Magnificent Seven?
Sure, yeah.
I wish I had that sort of foresight, as an ETF guy. It's more of, okay, how are we going to asset allocate to a portfolio? We think there's an important element of having these growth companies, and that's why we think an ETF like FFOG makes a ton of sense.
All right. So your point is, hey, this is why we got the basket, man. Buy them all.
Exactly.
All right.
Exactly.
Well, there's some other names in here that we've talked about the last couple of weeks, MasterCard, ServiceNow. So the growth component's clearly playing a role here. Let's switch overseas. You guys have got a couple of funds focused in Japan and India, and I feel like of all the non-U.S. regions, these are the ones I've heard the most about, in particular Japan, as it seems their market likes a bit of central bank tightening, which is so different than so many other economies.
Yeah, international equities are an important part of an investor's portfolio. We launched a whole suite of single country funds that would provide that target exposure for investors. You highlighted two of our better ones in terms of asset gathering and size over the last, call it year plus in Japan and India. I think both of the, from an AUM and inflows, each of those a little over $500 million. But yeah, you hit the nail on the head. Investors will look at, for Japan, look at the central bank, look at all the earnings ratios to say, okay, is this a good time to get into the Japan equity market? Something like India, maybe more of a growth story, looking at the emerging marketplace, especially compared to other emerging markets like China, for example. So we've just been really excited to offer the investors the targeted single country exposure.
What's the India elevator pitch? Hit me.
India elevator pitch. We like the fact the growth story seems strong, and we like, call it the almost the noisy or messy democracy that I think there's just a lot of interesting growth opportunities as they kind of come more onto the world stage.
Okay. Yeah, pretty messy indeed. But I guess when you've got room for improvement, then that gives you a case for the market attached to it. All right, the highlight over the last couple of weeks, of course, has been your guys' participation in the Bitcoin spot ETF race. How's it going a couple of weeks after?
It's going great. I mean, I guess there's a couple ways to look at the question. Given all of the time and spent to build out the pipes, from an ETF perspective, the creations, redemptions, how's that thing going to trade? It's been great so far. I mean, the price of Bitcoin, I think, has probably been down about 5% since these funds have launched. But in terms of type bid ask spreads, our spreads have been typically around 1 penny. Tracking the spot of Bitcoin, I know it sounds simple that the ETF is supposed to do what it's supposed to track the spot price of Bitcoin. That's worked as anticipated. Can market participants create and redeem shares easily? That's worked as possible, and it's been borne out by the inflows that all the Bitcoin funds have seen since launching a few weeks back.
Okay. Easy BC, good ticker, by the way. Seems like there's a message in there, EZ. What do you want to see in terms of its trade next to other assets, its correlations, its relationships? Because at this point, feels like the adoption narrative is, we kind of got there, mission accomplished, it's an ETF. Now it's how does it fit into my portfolio? What do the people want to see? What do you want to see?
Yeah, great point. The whole conversation is now migrated to, okay, how are we supposed to think about this within a portfolio construction? And a lot of the data is very compelling. The conversations we're having with advisors, and especially a lot of the gatekeepers who are taking a few months to kind of digest these funds and make sure that they're doing what they're supposed to do, are saying, okay, from a risk-adjusted return perspective, what happens if we start adding 1% or 2% or 3% Bitcoin to a client's portfolio? And it's interesting that, okay, it's Bitcoin and it's certainly a new technology and it's a new innovation. But if you sort of look at some of the volatility metrics, they actually compare quite favorably to AI and other growth stocks. And so I think as the research continues in terms of how this should fit into a client's portfolio, we wouldn't be surprising to see that percentage start trickling a little bit higher.
Okay. Good answer. At least you didn't tell me it trades like gold. We're going to have to start fighting. Good stuff, David Mann. Thank you very much.
Thanks, Oliver. Thanks for having me.
Appreciate it. And he's spot on there. Head of ETF product and capital markets, Franklin Templeton Investments.